up, traders? My name is Layla, and welcome back to this week's no-nonsense market recap from Bullish Bear. While the market's doom and gloom soundtrack has finally been turned down, we're not exactly dancing in financial paradise just yet. Let's get into it. This week was the definition of bipolar trading. Spectacular highs mixed with face-palm lows. Let's rip off the band-aid and dive into the good stuff. The S&P 500 just pulled off a feat that would make even Houdini jealous. In a mind-bending magic trick, the index has completely vanished its 15% year-to-date nosedive in less than 6 weeks. Talk about a resurrection story. Ever since President Trump has played market cheerleader and declared it a great time to buy on his social media soapbox, the S&P has skyrocketed up 14%. Apparently, American Street presidential stock tips like gospel because this is the market's fastest recovery from a 15% year-to-date freefall since 1982, according to the number crunchers at Bespoke Invest. Wall Street's crystal ball polishers are feeling the optimism too. Goldman Sachs hiked its year-to-end target to 6,100 from 5,900. Meanwhile, Yardney Research went full bull mode, cranking their forecast from 6,000 to 6,500. Someone's drinking the Kool-Aid. Inflation finally decided to chill out according to the latest CPI report, easing to its lowest level in over 4 years. This had Trump frantically typing on social media Tuesday, practically begging the Fed to slash interest rates already. But while Trump was popping champagne over the CPI numbers, economists were much less celebratory. Most believe the report barely moves the needle on the Fed's cautious to a point of paranoia monetary approach. In fact, looking for a near-term rate cut? Good luck with that fantasy. The odds of a June trim are a pathetic 9% according to the CME FedWatch tool, with July's chances limping along at a measly 37%. Fed Chairman Powell warned inflation could be more volatile moving forward, with supply shocks lurking around every corner, and hinted at the horrors of higher real rates. This gloomy forecast dropped right after headline PPI contracted 0.5% in April, completely blindsiding expectations of a 0.2% gain. Warren Buffett devotees can finally exhale. Thursday's much-anticipated Berkshire Hathaway filing revealed the Oracle of Omaha hasn't dropped any more Apple shares. The company still clutches its precious Apple stake like Gollum with the ring. Meanwhile, Berkshire doubled down on booze maker Constellation Brands while kicking Citigroup and Brazilian fintech startup New Holdings to the curb. Coinbase has had a roller coaster of a week. Monday, they said they were joining the S&P 500, and by Friday, they had already been cyber attacked with the SEC breathing down their neck. United Health shares plummeted to 5-year lows after Wednesday's bombshell report, revealing they're starring in their own criminal investigation drama with the Justice Department probing of possible Medicare fraud. To cap off their nightmare week, they slashed their 2025 outlook and showed their CEO the exit door faster than you can say scandal. In retail land, Walmart flexed their better-than-expected earnings. Meanwhile, Foot Locker shares skyrocketed a jaw-dropping 83% after Wall Street dropped the news that they're being scooped up by Dick's Sporting Goods. Retail drama continues next week with Target, Home Depot, and Macy's stepping into their earnings confessional. So there you have it, a week that couldn't make up its mind. The market's bearish stranglehold seems to be loosening up its grip, but the economic worry lines aren't going away anytime soon. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more weekly market recap videos. Until next time, stay disciplined, manage your risk, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.